If you're looking for ways to make your money work for you and potentially double your income by 2024, you're in the right place. In this content, we will explore 5 strategic investments that can transform your finances, even if you are a beginner. We will demystify the financial market, explaining each option in a clear and practical way, so that you can make intelligent decisions and start investing with confidence. The first investment that deserves to be highlighted is real estate funds, FIIs. These funds allow you to invest in the real estate market without having to buy a property. They offer a great advantage, the possibility of receiving monthly income, which works like rent, even without owning a physical property. Furthermore, many FIIs have potential for appreciation over time, especially with the recovery of the real estate sector. In 2024, with the economy recovering, FIIs can benefit from lower vacancy rates and asset appreciation. Another attraction is that the income paid by these funds, in many cases, is exempt from income tax for individuals, further increasing net profitability. The second investment that can double your money is the stock market, specifically company shares solid and with potential for growth. Companies from promising sectors, such as technology, clean energy, and healthcare, are among the most recommended by analysts for 2024. A strategy for beginners is to invest in ETFs, which are exchange-traded funds that allow you to buy a basket of stocks at one time. This helps to diversify risk, as you will not be dependent on the performance of a single company. Additionally, stocks can offer both price appreciation and dividends, creating a dual opportunity for financial returns. The third investment is cryptocurrencies. Although they are a riskier asset, cryptocurrencies continue to attract investors due to their exponential growth potential. In 2024, the expectation is that the market will heat up again with new regulations and mass adoption. The secret here is not to put all your money in cryptocurrencies, but to dedicate a small part of your portfolio, somewhere between 5% and 10%, to diversify. For those just starting out, the best-known currencies, such as Bitcoin and Ethereum, are safe options. Another important tip is to use reliable brokers and consider the security of your cryptos by storing them in digital wallets. The fourth recommended investment for 2024 is fixed income securities indexed to inflation, such as the Treasury IPCA Plus. These bonds are an excellent option for those who want security and, at the same time, protect their assets against devaluation caused by inflation. The IPCA Plus Treasury combines the variation in inflation with a fixed interest rate, guaranteeing real returns above inflation. This means that your money will not only be safe, but will also grow over time, regardless of the economic climate. Furthermore, these titles are accessible, allowing anyone to start investing with amounts starting at 30 Brazilian reals. Finally, the fifth investment that could double your money in 2024 is digital businesses. This may not be a traditional financial investment, but it represents one of the greatest opportunities to multiply your wealth quickly. Creating a digital product, such as courses, e-books, or applications, or investing in an online business model, such as affiliate marketing, can generate significant returns. The low initial cost and global reach provided by the internet make this option extremely attractive, especially for beginners. In 2024, with the continued growth of e-commerce and the digital economy, investing in this sector could be a smart move. Now that you know the 5 investments that have the potential to double your money, it's time to act. But remember, before investing, study each option carefully and align your choices with your financial goals. Diversify your portfolio and, above all, invest within your risk profile. Financial success is a combination of knowledge, planning, and consistent execution. Don't wait for the perfect time to start. The best time to invest is now. Now that you know the 5 investments that could double your money in 2024, it's time to understand how to make the most of these opportunities. In this second part, we will explore practical strategies to minimize risks, maximize returns, and ensure you are on the right path, even if you are new to the world of investing. The first crucial point is to diversify your investment portfolio. As we have seen, each of the 5 investments has different characteristics. Real estate funds, stocks, cryptocurrencies, fixed income securities, and digital businesses offer unique opportunities, but they also have specific risks. Diversifying means spreading your money across these options so that if one underperforms, the others can pick up the slack. For example, while cryptocurrencies are more volatile, Fixed income securities are much more stable, providing a healthy balance for your portfolio. Additionally, it is essential to define your financial goals before investing. Ask yourself, what do I want to achieve with these investments? It could be building an emergency fund, realizing a dream like buying a house, or even preparing for retirement. Your objectives will determine the level of risk you can take and the ideal term for each investment. For example, if you need the money in a short period of time, fixed income securities may be more suitable. On the other hand, if you are looking for long-term growth, the stock market may be more advantageous. Another essential factor is to understand the costs involved in each investment. Fees may seem small at first glance, but over time, they can significantly impact your returns. For example, when investing in real estate funds or ETFs, be aware of management and brokerage fees. In the case of cryptocurrencies, check the trading and withdrawal fees charged by exchanges. For digital businesses, calculate the initial costs, such as creating a website or advertising, and compare them with the potential return. Doing this type of analysis will help you avoid surprises and ensure that your investments are as profitable as possible. Now, let's talk about how to monitor your investments efficiently. A common mistake among beginners is to completely ignore the performance of their assets or, on the contrary, to monitor them obsessively. The ideal is to find a balance. Monitor your investments regularly, but without getting carried away by daily fluctuations that can generate anxiety. Establish a schedule, such as monthly or quarterly reviews, to evaluate your portfolio's performance and make adjustments if necessary. For example, if an asset like stocks or cryptocurrencies rises very quickly, consider taking part of the profits and redistributing them to more stable options, such as fixed income. One tool that can facilitate this monitoring is a financial management app. Applications such as TradeMap, Bloomberg, or even personalized spreadsheets help to consolidate all the information in one place, allowing you to view your complete portfolio and make informed decisions. Finally, never underestimate the importance of ongoing financial education. The market is constantly evolving, and staying up to date is essential to take advantage of new opportunities and avoid pitfalls. Read books, follow specialized channels on YouTube, participate in courses, or even follow trusted profiles on social networks. The more you learn, the more confident and prepared you will be to make smart decisions. As a beginner, it is normal to have doubts or even feel fear when investing. Remember that every great investor started exactly where you are now, taking your first steps. The secret is to start small, learn from each experience and, little by little, increase your exposure to the market. There are no guarantees in the world of investments, but with planning, discipline, and constant learning, the potential to double your money in 2024 may be more real than you think. You have already taken the first step in seeking knowledge. Now, it's time to put all this into practice and bring your financial goals to life. The market is full of opportunities waiting for you. Don't leave it until tomorrow. Start today. Now that you understand the importance of diversification, clear objectives, and financial education, it's time to delve deeper into practices and mindsets that will transform your journey as an investor. In this third part, we will explore how to deal with emotions, long-term strategies, and the importance of adapting to different economic scenarios. One of the biggest challenges for any investor, especially beginners, is controlling emotions. The financial market can be volatile, and moments of highs or lows can lead to impulsive decisions. Imagine, for example, that the stocks or cryptocurrencies you purchased suffered a significant drop in a short period. Your instinct may be to sell quickly to avoid further losses. However, in many cases, this emotional reaction can cause you to incur losses that could have been avoided. To deal with this, adopt a rational approach. A useful technique is to analyze the reason for the fall. Ask yourself, does this devaluation reflect real problems in the company or the market, or is it just a momentary fluctuation? Remember that investing requires patience and resilience. Great investors, like Warren Buffett, often highlight that the market rewards those who can think long-term and don't get carried away by short-term movements. Another fundamental point is to create a profit reinvestment strategy. When you make gains, whether from real estate funds, stocks, or other assets, it's tempting to use that money for immediate consumption. While rewarding yourself is important, reinvesting part of your profits can accelerate the growth of your wealth. For example, If you receive dividends from stocks or income from real estate funds, reinvesting these amounts allows you to take advantage of the power of compound interest. This continuous cycle of reinvestment is one of the most effective ways to build long-term wealth. Speaking of the long term, it is essential to understand the importance of adopting a strategic vision for different time horizons. Not all investments are suitable for the same objectives. For example, investments such as fixed income securities are ideal for those who need greater security or want to redeem their money in a few years. Stocks and cryptocurrencies are more suitable for medium to long-term goals, where you can tolerate market fluctuations in exchange for greater returns. Furthermore, it is important to be prepared for different economic scenarios. The global economy is constantly changing, and factors such as interest rates, inflation, geopolitical crises, and technological advances can directly affect financial markets. Therefore, review your portfolio periodically and adjust your allocations as necessary. For example, in a high inflation scenario, bonds indexed to the IPCA may be more advantageous. In times of low interest rates, stocks and real estate funds tend to perform better. Another aspect that deserves attention is creating a reserve of opportunities. Unlike an emergency reserve, which is used for unforeseen events, this reserve is a separate amount to take advantage of good investment opportunities. Imagine that the stock market undergoes a correction and several solid companies start trading at low prices. If you have a reserve of opportunities, you can take advantage of these opportunities to buy assets with great potential for appreciation. Finally, never underestimate the power of mentors and communities. Joining financial discussion groups, shadowing experts, or even hiring a financial advisor can help you avoid common mistakes and accelerate your learning curve. Remember, you don't have to walk this path alone. Sharing experiences and learning from others can be one of the most valuable tools for your success. At this stage of your journey, you are more prepared to face the challenges and seize the opportunities that 2024 has to offer. Remember that investing is not about chasing a quick buck, but about building a solid and sustainable foundation for your future. Your financial success depends on consistent choices, continuous learning, and the ability to adapt over time. Now it's your turn to take the next steps. Use the tools, strategies, and mindsets we've discussed to keep moving toward the financial freedom you deserve. We have reached the last part of our content, where we will consolidate everything we have discussed so far and bring you a clear perspective on how you can actually start applying everything you have learned to achieve your financial goals in 2024. This final phase is crucial to transform knowledge into action. Here, we will reinforce the strategies that can make the difference between a successful investment and a frustrated investment, in addition to discussing how the right behavior and attitudes can define your financial future. Firstly, it is essential to understand that the investor's journey is not linear. There will be ups and downs along the way, and the key to success lies in your ability to maintain discipline. When you start investing, it may seem like it takes a while for results to appear. However, the secret is to be patient and trust the process. What separates successful investors from those who give up before seeing the fruits of their labor is perseverance. It's not about a quick gain, but about solid construction over time. Therefore, be patient with your portfolio and understand that success in the financial market is a marathon, not a 100-meter sprint. Another important point is that learning never stops. The world of investing is constantly changing, and what works today may not be the best strategy tomorrow. Therefore, investment should not only be seen as a way to multiply money, but also as a continuous opportunity for personal and financial development. Read books, follow market trends, take courses, and talk to other investors. Financial education is a continuous process, and successful investors are those who know how to adapt and learn from market changes. The more you dedicate yourself to this learning, the more comfortable and secure you will feel in your choices. Now, it's time to talk about the power of financial planning. Set clear and realistic goals for what you want to achieve with your investments. Do you want to double your money in 2024? Do you want to ensure a peaceful retirement? Do you want to own your own home or go on the trip of your dreams? Each of these goals requires a specific type of investment and strategy. Carry out detailed financial planning, aligning your investments with your risk profile and the deadline for your objectives. Keep in mind that clarity in planning is what will ensure that you stay on the right path, without getting lost in the tempting options on the market. Planning also helps to avoid the temptation to make impulsive decisions based on momentary emotions. Along this journey, one of your greatest allies will be emotional control. As we mentioned before, the market can be unpredictable. And no matter how much you prepare, there will always be surprises along the way. In these moments, it is crucial that you stay focused on your goals and not let fear or momentary euphoria guide your decisions. More experienced investors know that the secret is not in getting every bet right, but in managing losses and taking advantage of opportunities wisely. For example, when things aren't going well, a good practice is to review your strategy, analyze what didn't work and adjust course. When profits are high, it's time to reflect on the best way to guarantee these gains and not get carried away by greed. Now, if you're wondering how to actually start and apply everything we've discussed, the answer is simple. Start small and grow little by little. You don't need to have a large amount of money to start investing. Nowadays, it is possible to start with low values, around 30 Brazilian reals, in public bonds, or even in some shares or real estate funds. The important thing is to take the first step. The financial market rewards those who start, learn from their mistakes and move on. Don't be afraid to make mistakes, as each mistake is a lesson that brings you closer to your goal. Furthermore, remember that financial success depends on consistency. There is no point in wanting to become rich overnight. Investing smart requires consistency. Contribute regularly to your investments, whether monthly or semi-annually, and reinvest your earnings. The effect of compound interest, combined with a constant contribution, can make a big difference over time. When you adopt the habit of investing regularly, you will be building a more secure and prosperous financial future. Finally, I want to emphasize the importance of making decisions based on your risk profile. If you are more conservative, investments in fixed income or real estate funds will be more appropriate. If you have a more adventurous profile, stocks and cryptocurrencies may be interesting options, but remember to always evaluate the risks involved. Ideally, you should know yourself, understand your risk tolerance level and adjust your investments according to your needs. The biggest mistake a beginner can make is trying to imitate the style of a famous investor, without considering their own profile and objectives. Now that you have the necessary knowledge about the 5 investments to double your money, the best investment practices and how to control your emotions, it's time to put all of this into practice. The key to success is taking action. Each of the steps you've taken so far brings you closer to greater financial freedom. Remember, investing is not about getting every move right, but about making the right choices at the right time. The journey will be long, but with discipline, patience, and a good strategy, you can turn your investments into an engine of continuous growth. Are you ready to take the next step? The market is waiting for you. Start now and see how, over time, your investments can actually double your money in 2024 and beyond. We've reached the end of this video, and now it's your turn to act. If you've made it this far, you're more than ready to take the first steps towards your financial future. Remember, the best investors start with small steps, and you can do the same. Now that you have all the information you need about how to double your money in 2024 and the best investment strategies, what you need to do is put it into practice everything you learned. Don't wait any longer. The investment market is full of opportunities waiting for you. So, what are you waiting for? Start building your portfolio now. Analyze the options that best align with your goals and start investing intelligently and strategically. And remember, knowledge is your greatest ally on this path. If you like this video and want to continue learning more about investments, personal finances, and how to achieve your financial freedom, don't forget to subscribe to the channel, turn on notifications, and share this content with your friends. The more people who know about these tips, the easier it will be for us all to achieve our financial goals. And if you have any questions or want to share your experiences, leave a comment below. We love knowing how you are applying the strategies and how we can continue to help you. Don't waste time. The financial future you want starts with the steps you take today. Let's go together on this journey towards financial success. Until the next video.